Welcome, ladies and gentlemen. Oh, what a day. What's going on in this marketplace? It is absolutely wild. And let me just break it down for you today because we've got a problem. The problem is the bond market is crashing and it's all happening in front of our eyes. Now, does the bond market matter to you? Unless you actually hold bonds, then no, you don't really need to care about whether the bond market is crashing or not. But why does the Nasdaq go up? Why does the S&P go up? Why does money go into ETFs? Why does anybody care about the bonds? And in today's live stream, I'm going to break it all down for you to help you understand why we've got a bit of a problem and what it can lead to in the future. More importantly, we're going to be having a look at cryptocurrency because we can see right now that we're seeing some very interesting price action across the board. Everyone's on the edge about whether this is the low or not. But if Bitcoin does decide to break a significant area, then ladies and gentlemen, we're going to be going into a cheaper Bitcoin. Well, that's just using more words to say that we could be going into a bear market. But you know what? We can't say that. No, you're not allowed to say that prices can go down. Just only focus on prices going up because that's what we are. We're all biased to one price, and that is the higher price because that's what we want to do. We want to buy Bitcoin at the most expensive price ever. We can't complain about it coming down and being cheaper. We can only be upset if someone says Bitcoin should be cheaper. We never want to pay Bitcoin on a discount. Never. That's what we are about. It sounds mad, doesn't it? How does that whole sentence sound like it makes sense? It doesn't. But if you really want your big Bitcoin and your most expensive Bitcoin, then what I'm about to reveal to you could be a trigger for Bitcoin to go up. So it might actually serve you to understand what's going on in the bonds market. So hopefully by the time we're done with this live, you guys will be satisfied with it. Let's get with the program and break it all down. The markets will be opening. Well, the markets are open, but the futures markets will open in the next 27 minutes. So let's break it all down for you. Happy days. So actually, first things first. Thank you very much for all the birthday wishes, ladies and gentlemen. You were all bold with that. Nearly choking. But yeah, embrace the bold. I used to have hair, now I don't. Let's get with the program. Here we go. So yesterday, the bonds market took a bit of a stab to the downside. And of course, it's starting to get people concerned about the state of the US bonds. The yields were flying up. And that's the problem we've got, ladies and gentlemen. When the yields start to go up, we have ourselves a bit of an issue. So let's just have a look at the bonds market over here. Check this out. The bonds and the yields right now are 2.2% on the 2-year. Okay, so it's up positive to 22%, 2.2%. And then you got the 5-year trading at 0.3%, 10-year at 0.2%. And of course, the 30-year is trading down a little bit because it did hit a significant high of around 5%, which grabs a lot of investors' attention. Now, let me explain to you why we've got a problem with the bonds market. It's right in front of you right now. Look, I've spoken about this before. Some people have said you keep talking about the same thing. Like I said before, if you find or try and find a million ways to make $1 million, you find one way. When you find that way, what you're going to do? Stop using that way? No. What I'm trying to say to you is there's some things that we need to stay focused on to help us understand what the bigger picture is trying to do. Right now, the reverse repo is at around 21.07 billion. Do you understand that this was nearly at around $2 trillion? How does that make sense? How does the fact that the bond market, okay, the reverse repurchase agreements where the US government says to investors, come and park your money over here, and we've got balances at 21 billion. That is terrible. The problem when we have such low balances is pretty simple. It can imply injection. What does that mean? It means that the US government might be forced to inject cash. This is a liquidity issue. That's the problem. It's a liquidity issue. And if there is a liquidity issue, then what does that mean? Well, it means the market ain't going to be looking too good or healthy for a cash injection. There's problems, okay? Whilst we're talking about it, is the live stream actually on? Are we good, ladies and gentlemen? I'm not seeing no activity on my side. Are we good? Give me a hey, ya. Morning, good afternoon. Yep, looks like we're all good. All right, cool. So, sorry about that. So that's what I'm trying to say to you. With this being at such a significant low balance, it gives us a problem for the bigger marketplace. Now, something else has caught my attention. China has just lost the top spot. It was second in US holdings of US debt. It's now gone down. The UK is in second place right now. Okay? There's something happening. Now, the UK has already got its own problems. All right? But the fact is that the Japanese are still all right with their bond accumulation of US debt. And then, of course, the UK itself is in second place. China's coming off. It's going down. They're actively selling bonds. That is a problem, which could be suppressing the marketplace. It's the only way that China can really screw it to the US, by forcing the yields to go higher. And when the yields are going high, we have this problem. Unrealized securities gains by bank type, okay? These are the unrealized losses and profits that banks currently hold right now. Well, we're in drawdown. And we're in drawdown of roughly around $500 billion. And that was the last reading in December 2024, okay? We're going to get another reading on this bad boy. It's actually more. It's like 568 billion. That is a problem, ladies and gentlemen. And the only problem that we've got is if no one buys US debt, the yields go up. And if the yields go up, that's going to be a problem for your stock market. Going over into the stock market itself, we can see that the NASDAQ right now is doing some very interesting things. We are waiting for the actual data to come out, which is the JOLTS job openings. And then, of course, if that comes in line with expectations of a lower rate of employment availability, then that tells us that the Federal Reserve is right to cut the interest rates. Looking at that, we've got 91.7% on the bets that they expect the rates to be cut. How much rate cutting are we going to get in the US? We don't know. It's all going to be based on data that comes out this week. JOLTS job openings today, and then tomorrow you've got the ADP, and then finally on Friday you've got the non-farm payrolls, which is the banger. That's going to put things into perspective for us, okay? But as I said before, this thing right here is going to be the basis of whether or not we have a freak event. When I say freak event, the second the Fed or the US government injects cash, the market will think that's a problem. It means liquidity issues. The only asset class that can really sustain this story would be Bitcoin, because Bitcoin is developing the idea of store of value. Let me explain. Let's go over to the actual ETF story, all right? Right now on Bitcoin's ETF accumulation, we have got around 746,810 Bitcoin ETFs. So they are actively eating up the Bitcoin. Michael Saylor's purchase yesterday of $444 million worth of Bitcoin. Happy days. That takes a balance to around 626,000 or something like that. So they're holding a lot of Bitcoin, all right? Now, Bitcoin needs a catastrophic event, and I believe that the bonds market is representing that. I actually do believe it. If you look at the 10-year bond market, it's going down, it's contracting, okay? But they know that the thing is, when you look at all the ETFs right now that are performing, they are all bond related because they know that the US government's going to step in and inject cash. You have to understand, this chart is telling you the state of where everything is in terms of the marketplace. It's not good. Thing is, when this goes up, it hurts Bitcoin's price. But the only reason it will shoot up is because the government is effectively trying to encourage investors to park their money in here because it's like a Wall Street savings account. And if they're not putting their money here, where else are they putting them? They're going to be putting it into the stock market. They're going to put it into cryptocurrency. They're going to go into commodities. Speaking of commodities, ladies and gentlemen, going over into it, where's gold? Let's just have a look at our gold price action right now. Where is this thing? I don't believe this. Metals, there we go. So gold right now is making significant movements to the upside, okay? And you can see that all-time high is coming into play again. That is a problem because investors are effectively, they're wetting the bed. The higher gold's price goes, the less likely NASDAQ and S&P should be going up. It doesn't make sense for gold to go higher. But there are other metrics that are coming into play with gold. The anticipation of rate cuts. If today's data comes out and shows that we do have less people in the JOLTS, that means we're getting a rate cut. That's great news for us, okay? That explains why gold's price is going up. Now, gold is in price discovery right now, $3,554. Happy days. Those of you trading gold, you're loving life right now, okay? Or holding gold. You really are loving life, okay? But once the Fed pivot comes into play, that means that investors can then take advantage of the fact that the dollar is going to be cheaper. Dollar then starts to move back up. Gold then starts coming back down again. This is, in my eyes, the hedging. Remember, I've said this before. They have been preparing for this move, okay? All of this was speculation on interest rates. That's why gold wasn't moving, because they've been accumulating gold. Now they are hedging themselves by releasing the liquidity, in essence, selling their gold positions, which is forcing the all-time high off the back of investors who are concerned about where things are in the economy. You only need to go over to silver. Silver's going to 41. I've been calling $50 silver. Happy days. Ray Dalio's been coming into play, and he's been saying, where is it? Hold on. There you go. He says you should start buying Bitcoin, and the debt is threatening the dollar. And of course, gold and alternatives are the next thing you want to be getting involved in. So that logic then tells you should be buying Bitcoin, gold, and Ethereum, and, well, crypto as such, and silver, and that's it. And oil, going over into oil, we just have a look at that. Oil is pulling back right now, okay? But oil tends to act as a commodity safe haven because investors are concerned. They know that regardless of whether the economy is crashing or not, people will still need oil, and that will force oil's prices up. And the problem that we've got is, yes, the US economy is doing well, but the Chinese economy isn't doing well. And Chinese economy is a great indication of where we are if oil's price goes up, because China consumes most of the US oil. And if they're not consuming it, it explains why oil right now is trading at $64.44. There's no activity. The activity in the US is the activity in the US, but it's not happening right now in China. That would probably make sense why they're offloading bonds. I think that there is a little bit of they're trying to screw America massively by forcing their yields up, because when they refinance corporate debt at these high yields, that's going to cause a lot of problems, ladies and gentlemen, which is where I expect that the government is going to come in and inject cash. They are going to inject it. Now, that's good news in the longer term. Short term, it will lead to a massive crash in the marketplace because there's an issue with liquidity. Okay? Speaking of which, let's just go and break down a little bit of price action for you, ladies and gentlemen. Going over to Bitcoin, it's doing relatively well right now, if we can assume so. Currently trading around the 111,340 region. Going over into the order flow to understand where we are with things. We've been hitting the offers quite significantly with Bitcoin. Seems like there's a bit of an issue inside of this range. And the zone that I really need to be paying attention to, of course, is this. If Bitcoin is going to lose this area here, the $107,000 mark, if it loses that point, you've got yourself a bear market, ladies and gentlemen. You do. Because if you look at the structure of price action, when we look at it on higher time frames, we could make the assumption and say, okay, then, do we have a structure here? Yep, M formation. What historically happens with a structure like this? Okay, if they're going to create this structure, which means they take the one high and they sweep the other all-time highs, and then they pull it back, what's the next logical spot? Retrace. That retrace then comes with a continuation back down again to offset the cycle. Now, the cycle is pretty simple. You all know this cycle right here. Look, W formation. What is he doing? Rise, retrace, level 1, rise, retrace, level 2, rise, retrace, level 3, peak formation, drop level 1, drop level 2, drop level 3, peak formation. So now take that. Look at that. Okay? Now look at this. Are we in that same structure? W formation, rise up, retrace, level 1, rise up, retrace, level 2, rise up, retrace, level 3, peak formation. M formation, drop, retrace, level 1, drop, retrace, level 2. This is why this level needs to hold, because if it doesn't, then we'll be going into a cyclical move to the downside to start recovering things. And then the Fed pivot comes into play, Bitcoin drops, and then makes the recovery back up. Sounds great when you look at it like this, but this is how the cycles in the marketplace work. Accumulation, distribution. Okay? So we've got this cycle over here. Are we going into the next cycle? And then you could say, okay, then how far will Bitcoin's price go up? Well, as long as Bitcoin's price doesn't take the all-time high, this logic here says that Bitcoin is in a cyclical play to the downside. Okay? That's accumulation for you. And if you go in to look at, oh my days, what is going on here? If you go in and look at what happened in last night's live stream, yesterday's live stream about the 20-20-40 method, you could then say to yourself, all right, then, cool. 20% here, 20% here, 20% here. Then you've got the other 40% waiting. Bitcoin shoots up from that range, plant the 40% there, make a bit of profit, first level retrace on the W formation, get rid of the profit on the 40%, and then it continues back up. Then you're seeing the returns on this, this, and this. If you align your DCA in with the expectations of when interest rates are going to get cut, you technically will be buying Bitcoin, and then it will be appreciating as time passes by, because we're going into an easing cycle. But that's what everybody's waiting on right now. They're waiting to understand if the easing cycle is going to be as easing as they would like it to be. With only one rate cut coming into play, that's going to be a bit of a problem for the marketplace. It has to go down to around 3.75, even lower at 3.25. That's what it needs to do. to really grab investors' attention to start going over into the US bonds market. But right now, they're not getting that. And that's a problem. Okay? Any questions, ladies and gentlemen? What we got here? Tino, is UK going to be the backup factory? Look, it's keep the door closed. Keep the door closed. Don't come in. Don't come in. Don't come in. Do it every time. Is the UK going to be the world's factory? Well, not the world's factory, but what can I say? Who keeps trying to come in? Never mind. Anyways, anything else? Can you... Why is my live stream doing it? I know why. I know why. So, can you start wearing different funny hats every day? I think it would be cool and most entertaining. Look, let me just explain something, okay? Firstly, I want to thank you all for this, all right? This is the birthday board, all your wishes and what have you. But, I just want to thank everyone. Mike, thank you so much for setting this up. But all your comments right here and all your great memes and what's going on over here? Yeah, all your funny videos and pictures that you're putting up for me. I mean, yeah, the Batman, thank you for your comments. I mean, look at that virgin over there. What the hell's going on there? Mr. Lee, okay, we'll take that one. And this dude as well. But then we've got other ones as well that are coming into play, which are really interesting. I like them. Here we go. Happy birthday, Tony. I mean, Tino. Mad love to you, my bro. It's Tino. You completely changed the name and it's still the same amount of letters in the word. Bruv, come on. Yeah, there we go. Dogs and cats. I haven't got animals watching these live streams. And then, yeah, that's my alias, Jim Carrey. AI version. And then this. Who did that? What does that mean? What does that mean? That's going to be tonight's thumbnail. I like this one, though. And then there's this little video here, XRP. For God's sake, stupid asset class. And then you've got Donald Trump's hair right there. But listen, mad love and thank you so much for all of that. I saved these bad boys. And, there you go, my guy from Greece, living it, loving it, But thank you so much for doing all of that, ladies and gentlemen. I've got nothing but love for you all. Thank you. Anyways, let's get back into it. Actually, I'll show you this. This is kind of funny, all right? And this is in the Discord, okay? So I'll show you this just because it's just so funny to look at, right? You ready for it? So I've got this birthday cake vibe. I've got, I'm buffed out over here. Thor as well. I think that's the one that wins. This is the FOMC one. All right, we're going to be having that in the next 15 days. That one right there is awesome. And then we've got the Kim Jong-un one. I mean, that's the one. I think I might even use that. I don't know if it will be sensitive not to, but, happy days. But seriously, bro, this right here, what the is that? It looks so real. Stresses me out. But anyways, I hope that makes sense to you all. All right, guys, anything else? It's Tino, man. It's Tino. It's 4 letters, man. T-I-N-O. Anyway, Tino, what scenario should you look for for this continued run? The thing that we need to see Bitcoin doing, guys, is it has to break key areas where it had previously sold off from, okay? Something like this, okay? And something like this. The Jackson Hole Symposium story is very important. This range. If it can't break away from this range, then the idea of the guys that were buying up in this area here, well, they need to turn up in here, right? Now, there is a story on Bitcoin dominance coming into play, right? Bitcoin dominance spiked lower and it's only managed to make a little bit of a recovery, but I do believe dominance is going to start coming back up, guys. It really is. There's going to be that transition. Ethereum has had its run. It's hit its all-time high, but it won't go up again, in my opinion, until everyone is satisfied with Bitcoin, all right? Until the accumulation of Bitcoin comes truly into play. You've got such a massive event coming up with the interest rate cuts, changes in fiscal policy, monetary policy, sorry. And that is going to transition investors to start putting money elsewhere. Like I said, I'm expecting Bitcoin to react to a catastrophic event, and it's already unfolding with this thing right here, with the reverse repo. No one's putting money in the US government. They're not. Wall Street has to seek risk elsewhere. They're going into corporate bonds. That's where the better rates of return are. You go into a corporate bond now, you can get 4.679%. That's awesome. Why am I going to go and waste my time going over to the US government and getting what? What are we getting on that? We're getting 4.26%. Why would I do that? I'll go over and get corporate bonds. Now everyone's going over into corporate bonds. That means they're not going into US bonds. That's why the yields are going up and the bond market is going down. But the stock market is going up. That's the catch. Logic says that when the stock market, when the yields go up, it has pressure on the tech market. But the investors are supporting it by going into corporate bonds. So companies are effectively getting the cash from investors in terms of bonds, and the yields going up is not affecting them. If the yields were going up and the bond market was stable, okay, and then you've got the dollar dominance shooting up and the stock market going down, then you could then grant the idea that investors are going into safe havens like the yen, the euro, okay, gold, silver. But what's going on now is the yields are going up, but companies are going into corporate bonds. Investors are going over there, and they're getting their rates of return over there, and they're using that cash to offset the problem of the yields going up. Sounds really tricky, but it all makes sense as to why you're going to get trillions of dollars going into the stock market or into cryptocurrency. That's what you've got to be paying attention to. I believe that if they spike on this, that's a liquidity issue. Stock market corrects and pulls back. If we just have a look at the metrics of the stock market overall, okay, where we are, here we go. NASDAQ, right? NASDAQ right now hasn't seen an accumulation day, as in volume above average. It's not seen it in quite some time, but we haven't equally sold off in terms of a distribution day. So the market is waiting, and over the next 15 days, guys, where we at? Hold on a second. Where we at? Here we go. 14 days time. You're probably going to get a lot of this price action where price goes up and down, up and down. There's no consistency. I mean, if we look at the volatility index, that's pretty much flat as well. There's no activity. NASDAQ will shoot up and down as standard, but if the VIX ain't moving, it means investors aren't having to protect themselves in any other way from the stock market. But with that being said, you've got gold making all-time highs, and that is a classic representation of investors getting a bit concerned about things. So logic says that when the NASDAQ goes down and gold's going up, it means investors are seeking safe havens, right? If we just correlate that, well, NASDAQ's going up. Gold is going up. So what's going on? Well, they've got to sell the stock first, and they're not going to sell it when it's going down. They're going to sell it as it's going up. That rallies, that sends a rally to the upside, okay? So the stock market goes up, gold's going up. So investors are taking the profits from the stock market and then effectively going over into gold, forcing gold's price to go up. The guys who had previously hedged themselves inside of this range here are now selling into those participants going into gold. And when gold starts making Bloomberg headlines, you know that the market has effectively hedged itself. And then gold starts to come back. So now we're waiting for the next hedgeable event. This is the main event, the cutting of the rates, the anticipation of. That's why gold's going up. All right? Because the yield on the dollar is dead. Going over to the dollar, it's trading positive. Huh? Hold on, gold's going up, dollar's still holding out. Because they're getting ready for the rate cut. And that's what's happening. Bitcoin, in the meantime, is just going to keep doing what it needs to do. Okay? It's going to keep on doing what it needs to do. But if Bitcoin is going to buck the trend, okay, it needs to clear out 117,000, in my opinion. It has to. Sounds like it's far away, but it's only about 6 grand away. Bitcoin can easily clear that price action. But it needs to clear that 117,000 to sustain the idea that the test of this 800 EMA has got bid side support. You look at the bids, you can say to yourself, yeah, we've got quite a bit of interest coming into play inside of these ranges. That's Solana, sorry. Let me just go over to Bitcoin. Here we go. Yeah. So you got some support on bid side. Big bid support. There you go, 15 million at 110,800. Got some offers coming into play. But the problem that I've got is they were bidding over here and then they were selling it. Okay? They bid over here. You look. They bid side of these zones, right? And then they sell it. It rolls over, right? So what I'm saying to you is Bitcoin needs to move in terms of price aggressively to suggest the idea that the bids are retaining their positions and not selling it as soon as it starts working up, because then it can move all the way up, not take out previous highs, and then it can roll back down again. So what we need to see Bitcoin doing is clearing significant price points, because all it's doing now is just showing you bearish order flow. Drop, retrace, drop, retrace, drop, retrace, drop. That's all it's doing. Now, people will see this and think, oh my God, Bitcoin goes positive today. That's the bull market, and it's happening. And then the next day, it crashes and drops down again. And then it's like, okay, we're not in the bull market. We're in the bear market. But then Bitcoin goes sideways. It's accumulation. All right? But when you're looking at what they've been doing, they're in a bearish order flow. You zoom out, You then say to yourself, well, where's the next logical spot for them to land? It's inside of here. This would be your discount range. That was the last accumulation before the big all-time high. So logic says, go back into that range, let's start buying a bagload of Bitcoin inside of that zone, and then it comes back up again. We've only just tapped into it. We've retraced back into the range. Now we're going to get the proof as to whether or not Bitcoin's going to go higher or not. If you don't like what I'm saying about it, tough. This is the name of the game. It goes up and it goes down. When is a magical question. But if we're looking at the flow of things, you can see that they're going down. They're selling the rallies, selling the rallies. Remember what I said about a VWAP. Take a VWAP, anchor it, and you've got the VWAP like so. Where should you be selling your Bitcoin? You should be selling your Bitcoin here, here, and here. Where's your DCA? Wow, from here, and from here. Sell into that. Sell into the rallies, because you can make money when Bitcoin goes down. You don't even need to short it. It's not going to just continuously drop. But that could be short-term DCA behavior. And once we've had that big drop to the downside, that's when you can start considering doing DCA favoring higher prices, which means prices go up, you DCA here. Goes up in your favor, you DCA here. Goes up in your favor, DCA here. Because we've just come from a big corrective move lower. And you just keep playing that game. Right now, we could be going in the opposite side. There's nothing wrong with that. And if that's a problem for you, then maybe the game of investing isn't for you. Might not be for you. But it's all perspective. Tina, can you look at fund owners? Ah, yes, fund, yes. Circle, let's go and have a look at Circle. Let's have a look at where that bad boy is. Here we go. Are we at 100 funds yet? There we go. Start buying. I'll start buying this now. We're at 113 funds. 4% of the ownership of stock comes into funds. 3% is held by management. Debt is 2%. So we ain't going to have no problem with this company when it comes to yield on the US dollar. There's no issue with that because they only hold 2% debt. Okay? That's great news for us. Right? It's not going to be subject to changes in interest rates. 2% is nothing. Okay? So now that we're at 113 funds, that is, for me, a time to really start picking up and accumulating Circle for the bigger picture. I'll pick up a load of it. Just keep buying it. Set up a direct debit. Just take some. Take it. Take it. Just look what's going on with the endorsement of Kronos right now. I mean, that's what I was going to talk about for you. This is DeFi Llama, okay? And you can see what's going on in terms of staking. Stable coins is always going to be the most in that sense. But look at Kronos over here. We're starting to get activity, right? Big activity in Kronos. So people are going to start using that ecosystem to start staking, all right? So that now means that your Crow is getting more expensive in principle to utilize to stake. So that's why people are rushing in right now to try and utilize that. Look at what it was before, okay? It hit a nice like 3.16 billion, all right? So there's nothing stopping that from continuing back up, especially with this endorsement from Trump Media. And if you go into the Kronos app, all right, you'll see that depending on where if you've subscribed to certain services, all right, you can see what they're offering. All right, they've got this stock, free commissions on stock. You're getting, what is it? Hold on a second. Let me tell you right now. Okay, wait there, because this is going to help you understand how you can project out the idea of advancements on certain companies, right? So if I go to this card here, all right, then cool. So inside of this, you're getting, all right, so it says that in the future, right, I can get, damn it. Wait there. Oh, God, I can't find it. But basically, they're offering various services so you can start trading stock, okay? That's only going to generate more income for them. You get cashbacks. You get all sorts of stuff for Kronos. But the ecosystem is starting to come into play, all right? So the more expensive a native coin is, the more people are going to want to try and grab it on a discount or it's cheaper so they can put that to work. And with this Trump Media thing coming into play, that's great endorsement for Kronos. So just keep an eye out on that. Keep an eye out on the yields that are being offered, all right? Go into various ecosystems that are on the chain of Kronos, but just be very mindful of the low liquidity staking platforms. They can just literally fall out, okay? So just take that into consideration when you are doing that stuff, okay? Cool. Why would they need marketing? Basis claims. Why do you think Circle is a joke? Elaborate. I don't think it's a joke. A lot of people actually think it's a joke. I don't understand why you think it's a joke. I really don't. Do you understand what it means to get listed on the US stock market? And with the most scrutiny behind cryptocurrency, two big players, Coinbase and Circle, right? Circle has more market cap than Coinbase. Look. Here we go. Oh, no, sorry, forgive me. Average shares traded is more on Circle than Coinbase. But 77 billion, okay? 77 billion. And this got listed back in what? June 2021, okay? When it was all happening. And then you go over to Circle and the utility of what it's going to provide. I'm telling you, Circle is going to make its name on the merger and acquisitions that it's going to get involved in. That's the truth. I'm telling you. Mergers and acquisitions. This is a company that prints money. It's like the Federal Reserve for crypto. They're printing stable coins. It's only going to increase in value over time. The more adoption that comes into play, happy days. And the two big players are going to be Ripple and Circle. They really are. Why would Ripple want to buy out Circle? Because they know the potential's there. Offered $2 billion before. Circle said no. Now reevaluate estimates is what? 22 billion or more? You tell me why. If Ripple wants to buy the company, why is it a joke? Doesn't make sense, does it? Even if Ripple is a bit of a joke, but it's a big company, man. They have an interest. Okay? I've heard of nobody knows Circle. Ain't that a good thing? Because when everyone finds out about it, it'll be too late. That's the best thing about it. Tina, I prefer people think it's a joke. Longer the time, better, because that means more accumulate. That's correct. Can we have a look at Solana chart? Do you think that everything being built on it would have high impact on its market cap and adoption? Most definitely. Quickly go over and have a look at Solana. Solana's just been bouncing, man. It's doing a very slow. Its order flow is consistent with accumulation. Rise up, retrace, rise up, retrace, rise up, retrace, rise up, retrace, rise up. It's not because of channels or you know, you can look at it like this and say, oh, we got rising wedges and all of this stuff and everything's just going to come and collapse or whatever, okay? But it's order flow until it's not. So until the order flow then decides to say, all right, we're done with this accumulation now, we roll it over. And the thing you've got to remember, guys, is don't make the mistake of thinking that the coin's purpose on what it does, okay, is going to solidify its price action. Remember, the futures markets has more of an impact on the swap market, on the spot markets. It does. It carries more volume. Proof of that is right here, okay? This is all leverage. We come away from that, all open interest, okay? You got open interest amounts that are mounting so much more than what the spot market value is. So what's going to dictate the price? Regardless of the tech, right? The tech is going to do what it needs to do, okay? But when you've got speculators coming into the game and saying, I believe it's going to go down, I believe it's going to go up, well, your open interest, I mean, look, over here is $1 billion, 1.3 billion in open interest. It's people borrowing money. Because their view of price changes so many times, that's just going to keep on fueling the idea that futures markets will dictate the future of what a currency's value is going to be, because it's based off who's prepared to buy it and who's prepared to sell it. You know, that's my view on it. Cool. Other than that, Solana is pumping. I mean, it's pumping. But guys, listen, you've got news announcements coming out very, very shortly. Yeah, JOLTS job openings. That explains why the pump is happening right now. So just be very careful when we go into 3 p.m., 10 a.m. Eastern Standard, because this is going to dictate to us whether or not the Fed is going to be cutting interest rates. You're going to hope that they actually have a treacherous reading and it comes in at 6 million. That will be wonderful. That will send the market crazy to the upside. It really will, because we would be solidified in rate cuts, but then it will be, we need more rate cuts. If we get in line with expectations, then market, in my opinion, is just going to keep doing what it's doing, and then it's going to then contract and then accumulate until the next bout of data, which is the ADP non-farm. Okay? Cool. Now, with that being said, ladies and gentlemen, hope that makes sense to you. I hope I didn't scare you with the reverse repurchase agreement story, but it's facts right there. The Fed, or should I say the US government, is not getting the cash from Wall Street because they're losing faith in its ability to manage the US debt. It usually leads to a bit of a problem, I mean, hey, your stock market's at all-time high, so you can't complain. It's a perfect time to sell, in my opinion. Mad love and respect, ladies and gentlemen. Hit the like button, subscribe, and I'll tune into you all later on. All right? Thank you so much for my birthday wishes again. All right? Peace. Stop winking, man, you wet fish.